All right, guys, looks like we are live. So thanks for coming back to Champion Crypto. Thanks for coming back to another live stream. Where I'm looking at the chart today, I was a little bit surprised because Bitcoin is above 121,000. Woohoo! Because usually whenever there's like a weekend, there's like weekend volatility, there's like a dip because people like to take a little bit of profit and go have fun on the weekend. But what we saw, and especially in August, was a little bit surprising because August usually tend to be a weak month for Bitcoin. But the fact that we are seeing so much bullish sign, that is a good thing. So obviously, we are still riding on that news of Donald Trump allowing 401k to invest in BTC, and there's also like a few consecutive days of ETF inflow on both ETH and Bitcoin. And by the way, ETH is completely like BTC is bleeding against ETH, and ETH is crashing it. Like we're gonna look at the chart in a bit. And also there's like the expectation of the September rate cut. Perhaps that is also playing in like a little bit why we're seeing such a huge pump in the crypto market, both in Bitcoin and Ethereum. And also for Bitcoin, there's like the DeFi expansion. So the TVL in BTC DeFi protocols are actually exploding. So we're seeing higher gas fees, higher trading volumes. And I know like a lot of Bitcoin maxi are actually putting that BTC as collateral to take a loan because they don't want to sell the BTC, because who wants to sell the BTC? So we are seeing more traction for the Bitcoin DeFi areas. I'm also going to talk about this tomorrow with Fernando. Like, if you guys don't know, I do like a weekly show with Fernando. Wait, let me share my screen. I just realized I've been talking without sharing my screen. So we're going to look at the charts in a bit, but let's go to Fernando. Let's scroll down. Okay, so I actually do a weekly show with Fernando. So if you haven't followed this account, make sure you do, because we share a lot of perspectives and just talk about things in general. So yeah, make sure to give us a follow there, and I will be diving deep into the Bitcoin loan topic with him. So if you guys are interested, just make sure to follow us then. So yeah, great stuff. Let's get into the chart and let's look at how Bitcoin is doing. So Bitcoin, well, if you catch my previous show, you know that I drew this support line of Bitcoin, like around this region, 112K to 115K. This is really critical because, well, if you look at the area here, we have like a massive candle going up. So the reason why this region is so critical is because we need to build some price data in this region. Like otherwise we go up, and then if we go back to 116K, if we lose support, then we'll likely go back all the way to this region. This region right here. The reason why is because from a TA perspective, if there isn't much price data, then we don't have much support. So it's actually good to watch this level and have some price history here. So in the future, if Bitcoin pumps, there are some data to fall back into in the past. So if that makes sense. But however, like Bitcoin was so surprising because I remember I talked about this monthly chart. So if you go to the month of August, that actually, well, I mentioned 7 out of 11 months because I didn't count 2019. I'm not sure if you should count it or not, like minus 0.07. It's not a lot, but like, yeah. So if you count this, there are 8 months out of 11 months. We end up having a dip in August. Like, obviously, we're still early to say anything, right? Like we are only, today is 11th of August. So let's see if we end up on a positive number, positive rate of return, or negative. Like if we end up on a positive one, because if you, again, I like to look at the patterns, I like to look at the cycle. If you go back, August, we have like in the past, we do have a positive month. So in 2017, like we have positive July, positive August, but boom, like a negative September. So as 2020, up, and boom, down again in September. 2021, up and down. So what I'm saying here is that if we end up seeing a positive August, like a positive return for BTC, then I'm almost like I'm prepared to see a negative return in September, like a little dip. I mean, we can't just like have a staircase up to the heaven. It never works like that. And if so, that's not a healthy market. So dips are necessary. Yeah, so another region that I'm watching it closely is, let's draw this like a little rectangle, this little box. So we didn't stay within, maybe a little bit closer, between 100 and close to 116, 115.9. So let's call it 116. So 116K to roughly 119K. This is an area that I'm watching closely as well. The reason why is like, if you go back to, let's zoom closer. By the way, can you guys see my screen? Do I need to zoom even closer? Just let me know in the chat. Yeah, so, all right. All right, so let me pull up the brush again. So whenever we trade above this level, like 119K, maybe 120, call it 120, like you only see wicks like this, like we wick above. Obviously, today is Monday, 11th of August. We haven't closed this candle yet. I want to see this candle actually, it's not just a wick, so I hope that it doesn't close beneath 119K, because otherwise that's not like, that means we're getting rejected. So hopefully we could like have few candles stay above this level, and we can use this like 119K as support. So that's for BTC. It's looking good. And then, yeah, as for the long-term projection, I'm still eyeing to like 190K to 200K at the end of the cycle. Like people are saying that the Bitcoin 4-year cycle has been broken. I don't know which one is true. Like I do agree that even though if we get a bear market, then the dip might be like drastically smaller. Because if you look at the past, Bitcoin could dip like 80% in a bear market, and that was like extremely painful to look at the wallet. Yeah, I mean, I've been through that. Some of you guys have been through that. And that wasn't fun. But I do agree that since institutions like the mature money, so-called mature money, is flowing into Bitcoin right now, so I do agree that the dips will be a lot smaller. I don't know like how much smaller. And some people argue that the 4-year cycle is broken. Well, I don't know, but like I do agree that maybe we could stretch out this a little bit longer, because usually, by the way, we're on log scale right here. So if you take the cycle top, it's roughly like every 4 years, and it's roughly 210 bars. That's equivalent to 1,400 days. And if you stretch that out a little, everything is pointing towards like maybe like end of 2025, we're seeing a cycle top, or if you stretch it out, because some people say, okay, institutions are in, or the mature money is in, then maybe Q1 2026. And it kind of aligned with the market sentiment as well, because people are saying that we're going to get a recession. Like there's a concern about recession again. So yeah, this is at least what the chart has been telling me. I know some people would be so mad and so trigger because of that. But regardless, I'm prepared. So whether this 4-year cycle has been broken or not, yeah, because I'll make money from BTC. Well, another thing we have to, we just need to know, because this whale apparently is shorting BTC. So a whale deposited 6 million USDC into Hyperliquid to avoid liquidation as BTC broke about 122,000. The current position is 1,266 BTC with liquidation price at 127,000. Right now, this whale is at a loss of $12 million. So the reason why he has to deposit even more USDC onto Hyperliquid is to avoid the liquidation, to add that collateral, add that margin. So yes, people are making fun of this whale, and I saw an interesting comment on X. So like, James, is that you? Like, I love when I saw that comment. So James Wynn is a very very funny and famous trader on Hyperliquid. Basically, he made like millions of dollars trading, but he lost all of that money on Hyperliquid and end up like begging for money on his X and asking for donations. So he's pretty funny. But like, if like, let's say if this whale is hedging, I don't know, because he could have like multiple different wallets, and this is just like one of the wallets that he's having fun with. Like, if he's doing for hedging purpose, I think it makes sense. If not, like, since he's shorting, like, oh shit, let's go back. Since he's shorting, right? Like, if we end up seeing like a short squeeze, it's also beneficial for the Bitcoin price. So yeah, it's quite interesting. And if you also look at the Bitcoin ETF, it also explains why we are seeing this massive pump of Bitcoin price. So we are here on BTC terms. So you can see like 3 consecutive days, we are seeing green column. That means more inflows are coming from the BTC spot ETF. Let's also take a look at the USD value. Well, that's like a lot of money. So like $700 million from BTC ETF alone in the past 3 days. Yeah, that's looking good, because like that kind of counteract with what we saw just like last week. People were, I wouldn't say panicking, but like, oh, why is Bitcoin dipping? And look at the Bitcoin ETF, and then Bitcoin, and then people were a little bit concerned. So yeah, that kind of like, it's not like really concerning anymore. And then let's look at the Ethereum net inflow. Well, look at Ethereum, like 4 consecutive days inflow. There are like 2 days with a little bit outflow, but it's fine. Like, look at this 4 days. We should be happy, right? So this is in ETH. Let's take a look at USD. Oh wow. So yeah, Ethereum has like even bigger inflows in the past 4 days compared to Bitcoin. So that's pretty good. Maybe that's why BTC is bleeding against ETH and is holding this like critical level rather well. Well, initially I drew the support line at 0.032, and this is quite critical because, like, if we go back to January till like almost like August, so like 180, so close to 200 days, we are mostly trading below this area. So it's acting at the resistance, especially for like 2 weeks ago in back in July, so late of July, 20th of July. Yeah, I mean, this level has been broken. It's been broken, and right now we're trading at above another critical level that I'm watching, so 0.034. So yeah, looks like there's so much positive bullish news around Ethereum. I'm liking what I saw. We're gonna dive into the network upgrade, like the other reason why Ethereum is doing so good in a bit, because like I noticed a lot of people haven't even heard of the upgrade, which I was a little bit surprised. And also why I want to look into Ethereum a little bit more in a bit, because we're seeing this flipping, and Ethereum is flipping Mastercard. So that's pretty good. But before we get into that, I have to start with the ugly news. Because like I was looking at the news, like doing my research, and then I saw this chart. So this is the US public debt, the total debt. We are reaching a new all-time high, $37 trillion as of today. Like if this is a chart for some shitcoin or Dogecoin coin, I'll be extremely happy. However, unfortunately, this is a chart for that. So we know how it goes. Like, let's look at some key numbers. Like, first of all, $37 trillion. That's new all-time high. And if we also take a look at the debt to GDP ratio is at 120%. So that's really concerning. Anything above 100% is concerning because it signals like the potential long-term sustainability concerns. And if you look at the interest on that, it's even more concerning. So the US is paying like $1 trillion just on that, just on interest of that. It's not even the capital of that. So yeah, it's running on a huge deficit right now. So why does this matter to Bitcoin, like this ugly chart? Like, so we all know this explosive growth in debt is unsustainable, right? And it signals like it makes sense why people are talking about Bitcoin or even a potential national Bitcoin reserve. Like if like as the debt is growing so much, so does the risk of inflation and pushing investors toward other hard assets like BTC. And if you like look at back in 2000, the debt is actually like controllable. It's like 5 trillion, but only the past 25 years it got so sorry. It got so out of control. Oh, sorry. It got so out of control. And then right now we're seeing 37 trillion today. And then yeah, so there are key drivers for this like national debt, like 37. That is so ridiculous. So there are key reasons why we're seeing this. First is that it's structural deficits, like entitlement programs like Social Security or Medicare are actually driving future liabilities of over, I think, like $50 trillion. So that's a lot of money. And then also government spending, a combination of defense, healthcare, and infrastructure spending keeps pushing that higher. So yeah, and speaking of this, I actually want to give some credits to Jerome Powell because back in when there was like a dozen years ago, that when there was like a war and inflation was mostly caused by baby boomers buying houses and borrowing money. So back in the days when Fed raised so much interest rate, it was very effective because at the end of the day, the Fed only has two tools: either print money, like buy bonds, or lower rates. That's all the tools they have. So, like, all I'm saying is that, okay, back in the days, the inflation was driven by actual citizens like buying all these houses and caused the inflation. However, like in 2020, inflation was driven because of government spending, so fiscal dominance. Yet the Fed could still control inflation. So I think, like, I think I think most of the people are giving Jerome Powell such a hard time, and I don't really understand why. I think he has done a fair job if you think about that. And like with this high rates, by the way, I think like high rates, it doesn't make sense for the US, because like when you have high rates, that means like the US government also have to pay higher interest on bonds as well. And how they can come up with that money is by printing more money. So yeah, so I'm saying that the Fed will lower rates sooner than later, and especially in September, we're having like such a weak labor market. So everything is pointing towards Bitcoin, because Bitcoin is directly tied to the debt crisis. So as the US prints more money to finance its debt, the purchasing power of the dollar erodes, making BTC more valuable in comparison. And so the key point is that Bitcoin acts as a inflation. As the government prints more money to pay its debt, the value of the dollar decreases, but Bitcoin's fixed supply actually protects the inflation. And there's also a direct correlation between Bitcoin's price and also global liquidity. Like, I don't understand why people think this is controversial. Like, I'm not throwing random number out. Like, if you look at the Bitcoin correlation with global liquidity, there's a 0.94 correlation. Yet people still think I'm talking shit. I'm throwing random number. But yeah, I trust the data. And if you don't think it's deeply correlated, you do you. All right, and then there's also the talk of strategic reserve for Bitcoin. Ideas like this, like, there's no way we could fix debt at $37 trillion. But with the Bitcoin Treasury, or even like crypto stockpile, ideas like this, like having a Bitcoin Treasury, it could reduce debt burdens over time. Like, some models suggest that Bitcoin could cover $21 trillion of the national debt by 2049. But again, let's see if we end up getting a Bitcoin Treasury or not. Yeah, so everything is looking pretty good for Bitcoin. However, if you do believe that we will see a recession in 2026, because labor markets is slowing down, having a massive revision, like almost, I think 500,000 of jobs just disappear because of that revision. So if you believe that, I think like unemployment rate is 4.2%, but if it gets to 4.4%, is concerning, and it's also an early signal for recession. So everything is kind of aligned with the Bitcoin cycle. We are saying, okay, year end, if it stretch it out because of institutions, then maybe like Q1 in 2026. And then the Fed likely going to lower interest rate in September. So like usually the Fed will, it depends how much they lower the rate. People are saying maybe like 0.5%, 0.5% in 2025. Like if it's like massively reducing the rate, it also means that the Fed is seeing something that maybe us is not seeing, like we are such a huge slowdown in economic activity. So yeah, so that is the risk that we have to look if we if you guys haven't bought Bitcoin, which I doubt, because like if you're watching this live stream, you guys are extremely early, and you should give yourselves some credit too. All right, so yeah, back to the debt. This is heavily aligned with what Lynn Alden said. And by the way, I love Lynn Alden. Like I watched so much of her interviews, and she's like full of perspective. And she criticized the global monetary system, like it's a broken money system. That's how she put it. Like central banks print money, leading to inflation, which benefits the government but harms savers. So yeah, if you haven't bought Bitcoin, please, I beg you. Like Bitcoin is a flight to safety. It's not only about investment. Like Bitcoin is the new digital gold. I remember I covered in the last stream, like before the weekend, on Friday stream. So just the previous one. Yeah, there's like tariffs on gold right now. But the good thing about Bitcoin is that Bitcoin can't be tariffs. So that's pretty amazing. So if you guys haven't held any Bitcoin, is yeah, I think maybe do some research. Again, it's not financial advice, but like I don't understand why people won't hold Bitcoin. And long term wise, I do believe Bitcoin, as I mentioned, will go to like 200K this cycle. So let me know in the comment below, like how high do you think Bitcoin will hit in 2025 in year end or even cycle top? We could have a little discussion. All right, so that's for the chart and also for the debt. Let's move on to Nvidia. What have we got here? Nvidia. All right, so here's the news. Nvidia and AMD have agreed to pay the US government 15% of the semiconductor sales in China. The agreement is part of a deal to secure export licenses to the world's second biggest economy. So Nvidia also said America cannot repeat 5G and lose telecommunication leadership. America's AI tech stack can be the world standard if we race. So under the agreement, Nvidia will pay 15% of its revenues from H20 chip sales in China to the US government, while AMD will give the same percentage from its MI308 chip revenues. All right, so what's the key takeaway and key motivation here? Why does it matter for your portfolio? Because that's all we care about, right? So this deal unlocks billions in sales for Nvidia and AMD. And of course, like if you unlock billions of sales, we're going to see like a boost in terms of their stock price. I'm not sure if you guys hold Nvidia or AMD. I have Nvidia, and because I do believe the AI trend is going to be the future. I think if at the moment AI is still not in your portfolio, maybe you should consider adding a little bit in your portfolio. Maybe like it doesn't have to be like degen stuff, because you can go down the hill to degen stuff like factual protocol or even smaller AI agents. But I think having like safer bet on AI like Nvidia or Tesla is actually it's making a lot of sense. And when you see Nvidia is re-entering the Chinese market, like is another boost for the stock price. So even though they would give out 15%, that's like still a lot of money. And this move is actually to ensure that they remain competitive while navigating political tensions. So a lot of people, when they saw this news, they were a little bit confused, like whether this is tariffs or is it like tariff tax, or how does that work? Well, the short answer is no. This is not a traditional tariff, but a revenue sharing mechanism tied to the US export controls under laws like the Export Control Reform Act. So the deal applies only to revenues from downgraded chips. This is being Nvidia H20 and also AMD MI308. Those are not the advanced chips. Like those, the advanced chips are still banned to China. So both Nvidia and AMD would now need to apply for export licenses from the US, and the licenses are granted with the condition that 15% of the revenue is remitted to the US Treasury. The payments model more like royalties, I'll say. And the companies must undergo audits for compliance. Like if they don't comply, of course, there'll be like penalties, as what we have seen in companies like Huawei. So, yeah, what do you need to know about this? The key takeaway is that like this agreement is part of a like broader strategy for the US to maintain a technological edge over China, especially in the AI space, of course. It's not just about money, it's about controlling the flow of advanced technology to potential rivals. So for Nvidia and AMD in the short term, it's definitely a big win. Like both companies stand to gain billions in dollars in new revenue streams. With Nvidia projected like $15 billion with this H20 sales, like because H20 is only for the Chinese market, right? And AMD's $800 million with that MI308 sales. Of course, they will lose 15% in revenue to the US, but like this still diversify their income and reduce reliance on the US market alone. So this is actually really bullish for Nvidia. As for the US government, of course, they're going to get like revenue from that is around like $2 billion for the Treasury without new taxes. And yeah, this money is going to use for like tech, R&D, or even national debt reduction. Like, but that is a joke. Like, look at this. It's not going to reduce much with $2 billion when you compare that with $37 trillion. But as for having a little bit of extra cash to invest in R&D for tech, yeah, that's good news, right? But like if you read into the news, you know that this is more about geopolitics. Like the deal is a key part of the ongoing US-China chip war. It could provoke retaliation measure from China, like rare earth export, or even further development of domestic chip production, potentially escalating tensions. And for the broader economy, while of course it benefits Nvidia and AMD in the short term, the deal could slow global AI adoption by raising costs for Chinese companies. It could also view inflation if trade tensions worsen, affecting the broader tech ecosystem. So, like some people say, like ask me if this is fair to basically US just walk in to Nvidia being a private companies to ask for money. Like, yeah, is that even legal? Yeah, I mean, there are both sides of the argument. So the pro side is saying that US is just protecting its national security interests by controlling the flow of critical AI technology to China. And Nvidia and AMD benefit from like US R&D subsidies and tax breaks. So like sharing a little bit of revenue back to the country, it makes sense. But like some people think it's a little bit like extortion, like it undermine free market principles. But again, I think like this still is okay because like Nvidia, they started in the US and they made so much money because the US government allowed them to do what they have been doing and explore an even bigger market. So yeah, I think people don't have to be so mad about this. Or yeah, but speaking of which, speaking of AI, I shot a video yesterday because I was in Shenzhen yesterday and I tried out this Robotaxi for the first time. It's on my X. If you haven't watched that, please go watch that. And my experience to this Robotaxi was overall very positive. It was, I have to agree, like when I just sat down in the Robotaxi, I was a little bit scared because it escalated so quickly, like from 0 to, I don't know, like 30 kilometer or something. So I was really scared, like why is it like going so fast? But on an average, it goes like maximum of 50 km, 50 kilometers. So it was okay. And I think so I was in a Robotaxi for almost 20 minutes. So it's not like a short ride. And I was like, it's very cute. There's this cuddly toy in the front seat. Because I went with Fernando and another friend, and we had to sit at the back because the front seat was taken by the cuddly toy. We're not sure if we can move that cuddly toy, but we end up just like 3 of us sitting at the back. And it was really cute, like the wheel just like moving on its own and then giving out this like signals to the left or to the right. But it was really quiet inside that Robotaxi, so it's very interesting. They are only testing out this Robotaxi in certain area of Shenzhen. So if you guys want to try out, you have to go to certain region, not like the whole Shenzhen. So just bear that in mind. But it was overall really fun, and I think it's really cute. All right, so that's for Robotaxi. Let's go back to Ethereum, because Ethereum flipped Mastercard today, and I was really excited. So Ethereum right now is sitting at $521 billion in market cap, and Mastercard is $519 billion. Yeah, and then the next one we're eyeing at Visa at $653 billion. All right, so why Ethereum is basically on a rally for the past few weeks? Because like Ethereum has been honestly bad for months. Like everyone was like shitting on Ethereum, myself included, because Bitcoin was keep breaking new all-time high, and Ethereum, like if you look at the BTC versus, ETH versus BTC, like look at how painful this is. Like right now we have bottomed out, but like during the Bitcoin rally, Ethereum was sleeping basically. But right now, all of a sudden, we are seeing like institutions are adopting Ethereum. They are interested in DeFi or RWA. And then we have like Ethereum Treasury companies. We have this network upgrade. So let me dive into a little bit like what is going on, share a little bit of insights into that. So basically, Ethereum has been building this momentum for quite some time. And if you look at back in May, just a few months ago, so 3 months ago, like Ethereum was, where is it? So Ethereum had a major improvement. The key change was the, so this network upgrade called Pectra. The key change was the increase in staking limits from 32 ETH to 2000 ETH. So I think 2048 ETH, Ethereum. And this benefits institutions in several ways, actually. Because like when you think of institutions, they wouldn't just stake 32 ETH, like so little, like they're institutions. So they have like larger amount of money to invest, right? So they will stake a larger amount. And yeah, they're having the maximum from 32 to 2,000, that means institutions can now stake more ETH with fewer validators, so they can manage large stakes more efficiently. And fewer validators also mean lower operational costs, making it easier for institutions to handle staking on a massive scale. And with like higher staking limit, institutions can now earn staking rewards at a larger scale, making Ethereum more attractive as a yield-generating asset. So this is why institutions like, oh, okay. So Ethereum actually has been paving its way for months. Maybe they, I don't know which one first. Ethereum maybe saw that, okay, institutions are getting in, and Ethereum is the second best asset. That's why they have this upgrade. But I don't know. But like having this upgrade allow institutions, and right now, institutions are getting in. So that's great news, and that's why we are seeing Ethereum breaking this. Wait, did I have the chart? All right, so let's go to Ethereum USDT. That's why we saw Ethereum broke like 43,000. So 43,000 just yesterday. And then we're still close to that. So let's see if we break another like major resistance. Of course, the previous all-time high of 4,800. 4,800. Wait, did I say 43,000? Sorry about that. 4,300. Sorry about that. So yeah, major institutional inflow, and then there's also short squeeze, but that is like pretty standard explanation. And network strength, that's why all of a sudden is getting in, and Tom Lee basically being the biggest shield of Ethereum, speaking about Ethereum on CNBC every single day. So yeah, why is this important? Like we are seeing Ethereum being the legit asset, a serious contender in a financial world, and even competing with major TradFi companies. And so this yield-bearing and decentralized asset is gaining trust from institutions, thanks to maybe the improvements like the staking rewards or stability. So some people say that Ethereum will get to 6K in this cycle. I think that's likely, 6K. Let's see, it's going to be year end of 2025 or Q1 2026. Like if we think Bitcoin will reach all-time high in, I don't know, like late 2025, if we stretch that out a little bit, consider the institutions' money, then maybe December 2025 for Bitcoin, that makes like Q1 2026 cycle top for Ethereum. But again, this is just like speculation. All right, so yeah, that's for Ethereum. And if you look at altcoins are completely bleeding against Ethereum. Like, look at this sharp dip. Oh my God, like 51% dip for altcoins. So seriously, like obviously this is not a altcoin season by all means, but we know how usually cycles play out, right? First of all, we see Bitcoin all-time high. Second, we're seeing Ethereum. Ethereum is still rallying, so that's why all money is flowing from altcoins or even Bitcoin to Ethereum. And perhaps the next trend we will see is altcoins. But yeah, we'll see how that plays out. And if you also look at the Ethereum DeFi TVL, is reaching like right now it's $92 billion. That's like on a rally again, because institutions have to get in for the RWA and stuff. So yeah, it makes sense. I'm bullish on Ethereum. And yeah, before I go, let's see if there are any chats. Bitcoin cycle top prediction of 250,000. Yes, so I think is likely to reach 200,000. If you also pull out the where is the long-term chart? BTC USD. If you also pull out the regression band, it's still like within that region, like that pink region. So yeah, maybe if we have like 250,000 BTC, we'll be extremely happy. Well, anyway, so that's it for today's stream because I have to run. I'm a little bit late to my dinner, so my friend's gonna kill me. So yeah, I'll see you guys in tomorrow's stream with Fernando. So make sure to follow him. There is the Bitcoin Libertarian, and also make sure to follow me on X. So my handle is JemJemCrypto. Follow me on X. Follow me on YouTube. If you